Hi, this is Belladonna Riso with Century 21, and welcome to this installment of my video blog. As tax season is almost upon us, I wanted to touch on a few of the lesser known tax benefits of owning a house. Okay, so let's get into it. Now, before we get started, my quick disclaimer, I'm not a CPA, and I'm going to recommend that you go to a licensed professional to have your taxes done. But this is going to give you a couple of items that you can bring to their attention and see if these are things that you can write off on your taxes for the 2016 year. So number one is the one we're all familiar with, and that is the interest that you pay on your mortgage. However, did you know that you can sometimes write off taxes on your taxes? So if you're paying state or federal taxes, you may be able to include those on your 2016 return. Now, in addition to that, if you have made any improvements to your property for medical reasons, the cost of those may also be a tax deduction. Now, number three is something that we're also fairly familiar with, and that is if you are using a portion of your home for a home-based business. I know at least here in Utah, lots of folks have salons or they've got a little multi-level marketing business on the side. If you were running those businesses out of your home, make sure and talk to your CPA about it, because there is a healthy tax break that you may be able to claim for that as well. Now, if you have purchased a home in the 2016 year, part of the expenses of purchasing that property are also items that you can write off on your taxes. Now, you will need a copy of your settlement statement. If you can't figure out where you've put it, don't worry about it. Give your agent a call, or you can also go to the title company that closed the transaction for you, and they can send you a copy of that settlement statement. If you're one of my clients, just give me a quick call and I will make sure that we get one over to you ASAP. Now, the last piece is if you've sold a home in 2016, do you have to pay taxes on your profits? And the answer is maybe. So, question number one is, did you own the home for more than 2 years? And then number two is, if you did own the property for more than 2 years, was it your primary residence? And if it wasn't, did you at least occupy the home for 2 of the last 5 years, even if it was a non-consecutive 2 of the last 5? If you can answer yes to both of those questions, then odds are you are not going to have to pay taxes on your profits up to the first $250,000 worth of profit if you're single, or $500,000 worth of profits if you're a married couple. So hopefully that is some good news for some of you folks out there too. I hope you found this useful, and I look forward to talking to you again next week.